And welcome back. I want to give you guys an update regarding the luxury housing market because Redfin just announced today that luxury home sales sank 38%, the biggest decline on record going back to at least 2012, according to Redfin here. So I have a lot to share in today's video. Let's go ahead and dive right in. And of course, if you guys haven't subscribed just yet, I post frequent housing market updates so you guys can be more informed about making a more informed decision about whether you should be buying or selling a house, is what I mean to say. So anyways, I invite you guys to subscribe if you haven't done so already. I hope you guys get a lot of value out of my videos. I actually really enjoy making these updates for you guys. So with that said, let's go ahead and dive right in. Again, this was a report that was just posted on December 28th, which is today. Talk about frequent housing market updates, right? So anyways, according to Redfin here, sales of luxury US home sales fell 38.1% year over year during the 3 months ended November 30th of this year, the biggest decline on record. And by the way, that outpaced the decline of 31.4% of non-luxury home sales on a year-over-year basis. And this goes back to 2012. The data for Redfin here goes back to 2012. So luxury home sales sank 31 or 38.1% compared to non-luxury home sales declined by 31.4%, which is the gray bar right here, gray line. The red line is luxury home sales. So obviously home sales as well as luxury home sales increased big time in the second half of 2020 through 2021. As you can see right here, we saw a huge decrease once COVID hit, down by over 20%. But then after that, sales of luxury houses absolutely skyrocketed. Look at that. In the mid part of 2021, the increase on a year-over-year basis was an increase of 80%. One thing I will say, and I actually mentioned this in this report here, is that because we saw this huge increase of 80% here in the second half of 2021, it makes sense we're seeing huge decreases this year. Again, I'll share a little bit more about that here in just a little bit because actually I kind of provided some explanations by why we're seeing huge decreases in luxury home sales in the US right now. And by the way, Redfin is defining a luxury home as those estimated to be in the top 5% based on market value. So depending on the area, of course, but it's the top 5% based on market value for luxury home sales here. So the luxury housing market and of course the overall housing market has lost momentum this year due to a variety of factors. Those include inflation, relatively high interest rates, a sagging stock market, and recession fears. But the high-end market has slowed at a sharper clip for a handful of reasons, including the following. Number one, luxury goods are often among the first to get cut out of household budgets during times of economic stress. Number two, luxury properties are frequently used as investment properties, and with home values and rents posted decrease in 2023, investment prospects are lackluster. In other words, because home values have been decreasing and also asking rents have also been decreasing, we're seeing a decrease of luxury home sales for those who are looking into buying investment properties, for example. So in regards to rents, I actually have an update for you guys. I normally don't provide updates regarding rents because there's a lack of sources for trends we're seeing right now nationwide here. However, having said that, Redfin posted an update regarding rents a couple of weeks ago. And they say here rents are growing at half the pace they were this summer and also are expected to cool off in 2023. The median US asking rent climbed 7.4% on a year-over-year basis in November, the smallest increase in 15 months, and also the sixth consecutive month in which annual rent growth actually slowed down. By comparison, rents were up by twice as much this summer. On top of that, November also marked the third straight month of single-digit rent growth on a year-over-year basis, again, increasing by only 7.4%. You can actually see that when looking at this chart right here, going back to 2020, because rent growth increased by 7.4% on a year-over-year basis, but rent growth has been below 10% on a yearly basis for 3 consecutive months. And this is obviously way different compared to the end of 2021 and also the beginning of 2022, where we saw gains on a yearly basis of over 15%. And according to Redfin, they expect declines of rents to become more common in the next year. So they're expecting declines of asking rents to be more common in 2023. That should ultimately slow down inflation further. So a key component of inflation, or a measure of inflation, is asking rents or rents across the United States here. So if asking rents or rents decrease in general, that should decrease inflation further here. It says slow inflation will lead to lower mortgage rates, which should also bring back home buyers to the marketplace here. I actually do agree with them somewhat here, because if inflation winds down, that should lead to lower mortgage rates, because the Fed, of course, is raising the federal funds rate to combat inflation. So once inflation gets to more long-term historical averages, the Fed will no longer, or won't increase the federal funds rate in the near term, and that could decrease mortgage rates. The key question, though, of course, is how low will mortgage rates go? Because, of course, rates in 2020 and 2021 were around 3%. Now they're around 6.5%. So it's anyone's guess to see when home buyers will come back, and, of course, what mortgage rates will be doing over the next couple of months here. And so, of course, I'll definitely keep you posted with the latest developments. Redfin also provided the cities in which asking rents have been decreasing compared to 1 year ago, and also the cities in the US in which asking rents have been increasing the most as well. So rents actually fell in 14 major US metro areas. So Milwaukee, Wisconsin, asking rents decreased by 13.1% on a year-over-year basis. That was followed by Houston, Texas, Austin, Texas, Baltimore, Maryland, and then Minneapolis, Minnesota, declining by 4.1%. And here are the other 14 cities rounding out the cities in which asking rents have been decreasing compared to 1 year ago. In regards to the biggest increases of asking rents, Raleigh, North Carolina topped the list at a 21.8% increase of asking rents on a year-over-year basis here. Oklahoma City was in number 2 spot at 17.9%. Indianapolis, Indiana at 15.8%, Cleveland, Ohio at 14.9%, and rounding out the top 5, Nashville, Tennessee, increasing by 14.8%. And by the way, this is based on the median asking rent on a year-over-year basis in November. So asking rents from November 2021 compared to November 2022. And let's get back to Redfin's report regarding this huge decrease of luxury home sales. Obviously, one of them is due to decreases of rents. And number 3, high-end home sales or luxury home sales saw a huge increase during the pandemic. So there's more room to fall. And that's exactly what I mentioned, though, because back in the second half of 2020 through 2021, we saw huge increases in luxury home sales. Therefore, it's not a big surprise, at least on a yearly basis or on a year-over-year basis, that we're seeing decreases of over 30%. And a fourth reason why we may be seeing a decrease of luxury home sales is due to affluent buyers not having enough funds in order to buy luxury home properties, and that's due to a decrease in the stock market. So over the past 52 weeks or the past 12 months, the Dow Jones Industrial Average decreased by 9.5%. Also compared to 12 months ago, the S&P 500 decreased by 21%. And also the NASDAQ has been tanking, down 35% compared to 12 months ago. And therefore, because the stock market has been taking a beating this year, that's one reason why we're seeing this huge decrease of luxury home sales. They also talked about the cities in the US that are experiencing the biggest decreases of luxury home sales. So in Long Island, look at this. Home sales or luxury home sales plummeted 65.6% on a year-over-year basis for the 3 months ended November 30th. This is the largest decline among the most populous US metro areas. Long Island decreasing by 65.6%. Next came 4 California metros. So in San Diego, luxury home sales decreased by 60.4%. San Jose down by 58.7%. Riverside, California down by almost 56%. And also Anaheim, California declined by 55.5% on a year-over-year basis. So speaking of California, look at this. This is based on a report. I made a separate video for you guys about a week ago. This is a report from the California Association of Realtors. Sales in all price segments for November dropped by more than 40% on a year-over-year basis. So home sales for every single price segment decreased by over 40% compared to 1 year ago. However, though, The luxury market is actually worse than that because for home sales over $2 million, that actually fell the most of all price segments because that fell by 47.7%. So home sales over $2 million for the month of November compared to November 2021 decreased by 47.7%, the biggest decrease of all the price segments that the California Association of Realtors looks at. In contrast, the most affordable markets, which is sub 300,000 in California, experienced the smallest sales drop at only 41.4% compared to a decrease in the luxury market of over $2 million, down by 47.7%. Therefore, it's not a big surprise we're seeing huge decreases in home sales and home prices in the San Francisco Bay Area. Because in San Francisco, the median sold price compared to 1 year ago, again, this is November 2021 compared to November 2022, the median sold price in San Francisco decreased by 21.1%, declining from 1.9% 1 year ago. Now it's only 1.5%. San Mateo also declining big time as well, down by 19.8%. Now, as you can see right here, many of these counties here in the San Francisco Bay Area are recording decreases in home prices compared to 1 year ago. On top of that, we're seeing decreases in home prices in Southern California as well. So in Los Angeles, the median sold price decreased by 1.3% this November. Also, Orange County declined by 4.3%, and Riverside, California decreased by 1.2%. Going back to Redfin's report here, it says there are some early signs that overall home buying demand is starting to creep back up as interest rates decline. I would actually say it depends on what time frame you're talking about because yes, interest rates have been decreasing from the highs we saw at the end of October when rates were about 7.3%. But ever since the middle of December, though, rates have increased about 40 basis points, going from 6.1% in the middle of December. Now rates are about 6.5%. They also mentioned that mortgage applications have been increasing, as well as Redfin's Home Buyer Demand Index, which are both on the rise according to Redfin here. But also when you look at actually the actual data, though, applications for mortgages have increased about 14% in the last 2 months. However, though, compared to 1 year ago, applications for mortgages have declined by about 36%. And Redfin's Home Buyer Demand Index, which of course is a measure of requests for home tours and other home buying services by Redfin agents, it has increased by 6.5% from 1 month ago, but it's still down about 24% from 1 year ago. They also touch on housing supply for both luxury houses as well as non-luxury homes. So the number of luxury U.S. houses for sale rose 5.2% on a year-over-year basis. So housing supply for luxury houses increased by 5.2% on a year-over-year basis to roughly 163,000 houses for sale during the 3 months ended November 30th. This is actually the largest increase since 2016. By comparison, though, the supply of non-luxury home sales or non-luxury houses declined by 5.7% to about 552,000. So the supply of luxury houses has increased by 5.2%. However, the supply of non-luxury houses has declined by 5.7%. You can see this change when looking at this chart right here because the increase of housing supply of luxury houses increasing by 5.2%. And has more or less been skyrocketing ever since the beginning of 2022. Whereas the supply of non-luxury houses has declined by 5.7%. It says here this huge decrease of luxury home sales is obviously one reason why housing supply has been increasing. We're seeing a lack of home sales, and of course that's increasing housing supply, whether or not it's a luxury house or a non-luxury property here. But in the luxury home sale market, though, this is obviously a factor why inventory has been rising. So for example, new listings of luxury houses fell just 2.9% on a year-over-year basis. This is compared with a 19.8% drop in new listings of non-luxury home sales. So what they're saying here is that this decrease of new listings only down by 2.9% in the high-end market is one reason why inventory for luxury houses has been increasing more than non-luxury because new listings of non-luxury have decreased by 19.8%. Redfin also provides some analysis regarding the 50 most populous US metros and what we're seeing right now, at least for the 3 months ended November 30th of this year compared to years past, or last year, I should say. So luxury home sales fell in every single metro that they actually followed. So out of the 50 most populous US metro areas, luxury home sales fell compared to 1 year ago. The biggest declines were in Nassau County, which is Long Island, down by 65.6% on a year-over-year basis. Meanwhile, housing supply of luxury houses rose in 21 of the 50 most populous metros. The biggest increases were actually in Austin, Texas, increasing by 51%. That was followed by Denver, also at 50.1% or 50.1%. Nashville increasing by 35.7%. Warren, Michigan at 29.8%. And Atlanta, Georgia increasing by almost 26%. Redfin also looked at new listings of luxury properties as well, because new listings fell in 39 metros that they tracked here. 39 of the 50 most populous metros, new listings of luxury houses actually decreased. The biggest decrease was actually in San Jose, falling by 39.2% on a year-over-year basis. The biggest gain was actually in Denver, increasing by 44% compared to November of 2021. In regards to home prices, the median sold price of luxury houses rose in all but one metro. So only one metro recorded decreases in home prices of luxury houses. So in San Jose was the only metro there, declining by 0.3% on a year-over-year basis here. The biggest increase was actually in Miami, increasing by 28.1% in the median sold price of a luxury house there. And in contrast, the smallest increase was actually in San Francisco, only increasing by 0.1%. And with that said, please comment below with your biggest takeaways from today's video. Also consider subscribing as well. Hope you guys have an awesome day. I look forward to seeing you on the next video.